This is Alan Bush with the Financial Futures Forecast for Friday, March 20th. Starting out with the stock index futures, we are seeing good gains today. Much of this linked to ideas that central banks around the world will remain accommodative. And in fact, we are seeing additional evidence that those central banks that have been hawkish are becoming less hawkish. Of course, we did have the Fed at their meeting on Tuesday and Wednesday with surprising dovish comments in their statement. But just yesterday, we had the Bank of England with their chief economist indicating that the Bank of England may have to lower interest rates if inflation were to moderate further. Now, these are the first dovish comments that we had heard from anyone from the Bank of England, so that came as a rather big surprise. So either way, low interest rates globally should continue to support stock index futures for the long term. Now, moving over to the currency markets, we are seeing the dollar index under some pressure this morning. The dollar continues to suffer ill effects from the Fed's dovish statement from their policy meeting earlier this week. Most of the major currencies are trading higher this morning as a result. Also, some additional gains coming into the euro currency after reports surfaced that Greece is proposing reforms and submitting them to their European creditors earlier than anticipated, so that's somewhat supportive to the euro currency. Also, the pound higher after some better budget numbers from the UK Treasury. Longer term, though, we feel that interest rate differentials will continue to support the dollar in the long term, even though it has suffered a rather severe setback at midweek. Looking at all of the central banks' interest rate policies, the Fed, even though they are now a bit less hawkish, they are still the most hawkish of all the major central banks. So the dollar index soon, I believe, will find its footing, stabilize, and then probably make a move to at least test its recent highs. Now, moving over into the interest rate markets, we are seeing good gains there today, especially at the long end of the curve. With global accommodation in full swing, and as we mentioned, those central banks that have been hawkish becoming less hawkish. Now, most recently, the Bank of England with what their chief economist said yesterday. So the long-term trend still appears to be higher in the Treasury, especially at the long end. And I think that is a trend that will probably continue for quite a few months. Have a good trading day, everyone. And once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.